Welcome back to the channel. It is your boy PJ Trades here with another trade review and trade breakdown. Today we're going to go over the inverted fair value gap setup that we took this morning that netted us 54 points. So let's just dive on into it. As always, I'm going to start with the higher time frame draws on liquidity. I'm going to do bring price back here so you guys can kind of see what I was looking at. Going into the session. We can kind of delete everything out here so nobody's confused. So coming into New York 9:30 opening bell, I am looking at Friday's high getting tagged. Okay, that's going to be my first point of interest, that first draw on liquidity that I want to see get swept in order for me to get interested in this market. Okay, now, as you can see, I have down here all this LR. Whenever you guys see me mark this stuff out, this means that it's low resistance liquidity. Okay, in this example, this is low resistance trend line liquidity. If we're building a trend line, higher highs, lower highs, higher highs, and we're building and leaving behind all this liquidity. We'll come back to that later, but just kind of put that in your memory bank. Next, we have draws on liquidity at London low, which is an open draw on liquidity. London low was put in. It was never then taken coming into my session, so I'm interested in it. The next draw on liquidity is going to be Asia. Okay. And then below that is going to be Friday, New York PM low. Okay. So how I basically formulate my trades is I'm looking for these open draws on liquidity. I don't come into the market with a daily bias, a predetermined daily bias. That's very dangerous. I don't do that. I'm looking for open points on liquidity because as a day trader, I am day trading. I'm not in the market the entire day. I'm really only in the market from 9:30 to about 11:30. So I only care about what the AM session has to offer for me, right? I don't really care what it does in the PM. Okay. So what I am doing here essentially is simplifying the whole daily bias idea. I'm just simply waiting for a key area to get swept, and then we're looking for a reversal model into the opposite draws on liquidity, right? Very simple. Anybody can trade this stuff. Now, what happens here is we end up getting a nice sweep of the Friday high. Okay, the market comes down here and it builds up more liquidity. See how it didn't make a new lower low, another lower high? Just leaving more liquidity behind. But at the same time, we go up and we sweep into the Friday high. Now, as you can see on this manipulation leg up here into Friday high, what do we leave behind? We leave behind a 5-minute bullish fair value gap. Okay, so we mark that out in time. Notate for the people that want to, that are learning more and more and identifying other things. I will notate there also is a BPR resting in here as well. We won't talk about the BPR right now. Let's just talk about the 5-minute gap, because with this model, what we're doing and looking for is now a 5-minute inverse fair value gap to trade down into low resistance liquidity, London low, Asia low, and New York PM low from Friday. Okay. That's it, man. That's how simple this stuff could be if you're patient with it and you understand the model. Okay, but if you don't understand the model and you're not patient and you don't have discipline, and you don't have all the different things I speak about here on the channel, then this is just not going to work for you. Okay, so here comes the patience. Now, what we're looking for is a 5-minute inverted fair value gap, right? We want to see price invert this fair value gap right here. Okay. Sorry, give me 1 second. I just want to shut off this AC in the background. Okay. We can be quiet. We can focus a little bit more. So this 5-minute, okay, is of interest. I'm looking for it to inverse. We'll let price play out. And we get a very nice inverse fair value gap. Very strong, right, to the downside. Let's delete this last bar here because I want to talk to you guys about patience here. I already know that most people, even in my premium group, are getting FOMO here. We're getting FOMO. Oh my gosh, PJ, the market left without us. It's a 5-minute inverse. We're never getting back in. It's going to take all the LR, the London low, the Asia low, every single low without me. This is a common emotional attribute to trading. Fear of missing out. Very common. I understand. You have to subdue that emotion and almost completely eliminate it. If the market leaves without us, we're fine with not being in the trade. Okay, not taking a trade is a position. The market leaves without us, we do not get into the trade. We don't chase price, we wait for price to come back to us, right? So now we can mark this out as a 5-minute inverse. Now at this point, all we have to do is wait for this market to come back up into this 5-minute inverse and then see how it reacts there. I'm not going to just blindly short it. I'm going to show you guys how I played this. So the market comes back up, taps into the 5-minute inverse right here. Okay, now I'm starting to get interested in this price action, right? We came back in, we're inside of that old BPR. There is a BPR in here too for my BPR fanatics. It's sitting right in here. So we're in a BPR / a 5-minute inverse, right? So this is starting to look really good. Solid area for us to look for shorts, right? Let me delete the BPR. Just wanted to notate that for BPR fanatics. So we're up in this level now. Now look how this market just, boom, manipulates into that gap. I'm like, oh, all right. I love to see that. You love to see that. Okay, I love to see this type of stuff because this to me is when a setup is going to present. When I see that quick V-shaped area of this, know what this is? This is people's orders getting stopped immediately. People that just front run short here just got absolutely ran through. Okay, so I like that. That means that there's going to be an opportunity for smart money to get involved, which is what we want to be, is smart money, right? So market comes up into this gap now on the 5-minute, again into the BPR, into the 1-minute. Okay, now here's where things start getting interesting. Okay, boom, right here on this next candle. Now this candle right here on this manipulation leg up into the 5-minute, we're leaving behind a 1-minute bullish FVG. So now picture this on the 5-minute, we got a 5-minute inverse. Okay, now on the 1-minute, I'm fine tuning our entry. I'm waiting for this market to pull into that 5-minute inverse from earlier. And at the same time, give me another entry on a 1-minute inverse, targeting my draws on liquidity. Okay, so now this is what we're waiting for here, is a 1-minute inverse to confirm that 5-minute inverse being a strong level of resistance for us to spool this market down in the opposite direction. Okay, so here we go. Boom, inverse. Okay, there's the inverse. On the inverse, I am already into the trade. I like this price action. I like everything I'm seeing. Okay, we inverse, we tap back in. Entries right here. Stops are going to be above this manipulation wick high into the 5-minute inverse. Targets are going to be down at London low, Asia low, New York PM, Friday low, wherever you guys want to. First target for me is going to be that London low. That's going to be the free draw on liquidity. That's going to be the draw on liquidity that, we're going to, in my opinion, have a high probability of drawing into. So this is a clean 1 to 2 from here. Down to Asia is going to be a 1 to 2.62. And then that next sell side will be 1 to 3. Okay. Now, I traded this trade setup a little bit different today because I was trading intraday trailing drawdown on my Apex accounts. So I couldn't afford basically this market coming here, pulling back up, which it does, and then going down to the London low. So I took the quick 54 points. I'll show you guys what I took basically. Basically right here, we're done. I was already done right here. 54 points right into here. And I was done with that trade setup. Okay. So I was already out of the trade. Bada bing, bada boom. Now this trade did end up going full TP, but look what happened. And my exit was perfect here to avoid penalizing myself with intraday trailing, because this little 1 minute was holding up, and there was like a small SMT with ES. Not even, man. It was just, I just knew they were going to tease this low here. Okay. And I wanted to secure my 54 points, right? Now this market does come back up into that inverse. Watch what happens here. Back up into the inverse, back up to the old 5-minute inverse, retest that as structure. And then we start to slowly chop our way back down to the overall draw on liquidity, which is London low, Asia low. I think it even goes lower than that. And then our final draw on liquidity, which is the Friday New York PM lows. So as you guys can see here, there is a lot of framework that goes into this. Okay, we have a lot of things that need to be correct here. Like number one, Friday high getting swept, V-shaped recovery, 5-minute inverse, 5-minute inverse with a nice displacement through, a retest of that 5-minute, then a 1-minute inverse, and the market ends up displacing and sending out to a full TP. So that was today's trade idea. Love trading inverse for value gaps off of a liquidity pool like this. One of my favorite trades to take, especially when we have, 3 draws on liquidity lower. The inverse fair value gap model is probably one of my favorite, maybe right behind the unicorn breaker. But again, we trade this stuff in the premium group every single day of the week. Well, 3 to 4 times a week. And if you guys want to learn more about how to trade this or trade with me, definitely check out that premium group. I hope you guys are enjoying this stuff. I hope you guys are getting value out of these trade reviews. I really, the feedback has been fantastic. I know that we are creating a bunch of just solid independent traders. And I love this community. I love you guys. Have a great day. I'll see you guys in the next trade review.